let's talk about Ukraine and Russia. It is truly devastating what's happening in Ukraine right now with the battle between Russia and Ukraine. Our hearts and thoughts go out to all those impacted. From a purely investment point of view, let's look at how previous geopolitical events have impacted the economy and the stock market. So we went back 70 years looking at previous major geopolitical events. You know what happened historically? The S&P 500 drops about 5% on average, and then within 2 months it actually makes up for those losses. So we're not here trying to minimize what's happening, but the reality is if the economy is strong, usually the fear and volatility that surrounds these events turns out to present a buying opportunity. So let's dig a little bit deeper. Historically, looking back at these same events, if you do not go into a recession, okay, 1 year later, the S&P 500 ends up more than double digits on average. If you do go into recession, well, then you're in a little bit of trouble. Then the S&P ends up down double digits on average. So the question might come down to, do we see a recession coming in 2022? We feel that that is not likely. In fact, a lot of the economic numbers recently have been pretty favorable. Remember, the consumer makes up about 70% of GDP, of the economy, and the consumer is quite strong right now. Consumer spending was up 2.1% last month. That's way more than what was expected. Retail sales up 3.8% last month. Again, far exceeding expectations. Let's look at corporate America and earnings. So Q4 earnings came in way better than expected. What corporate America has to say about the future in terms of guidance is also really optimistic, and the economy continues to be in expansion mode. So to summarize, if we can avoid a recession in 2022, and we think we can, this weakness that we've been experiencing out of the gate could turn out to be an opportunity. The last thing we want to talk about, and this is one potential positive, believe me, among this sea of negatives that you're seeing on the news, and it's surrounding the Fed. So while the Fed has become more hawkish recently, hawkish meaning they are starting to increase interest rates, given the massive inflation that we're dealing with, interest rates have followed suit as they price that in. Well, with all the geopolitical uncertainty, the door is kind of cracked open a little bit for the Fed now to become a little bit more dovish, reversing course, meaning they might not raise rates as aggressively as they had initially indicated. Maybe instead of 7 to 8 hikes, we see 4 to 5. And in the last week or so, we're already watching, interest rates in the market adjust downward, pricing that in. So the Fed is going to have its first interest rate hike in this cycle coming up later this month in March. It's widely been expected and priced in, that it was going to be a 50 basis point hike this time a couple weeks ago. At this stage, the odds of that look to be very slim. So Jerome Powell, he's looking at what's happening geopolitically. It could impact the Fed to be, slightly more dovish, which could be more of a positive sign for equities going forward. Let's put a bow on this. It's devastating what's happening out there, and we're watching it every single day. The humanitarian issues are things that we just feel terrible about. But as we separate that and look at this through the lens of an investor, we do see positive signs looking forward in 2022. Thank you for watching this. We hope you found it informative and maybe somewhat comforting as well. Thanks.